Hey everyone, welcome back to Corporate Decoder, the place where we try to peek behind the curtain of corporate jargon and reveal the real story. Today, we're diving into Dauch Corporation's latest filing, and let's just say it has got a bit of a European flair to it. Get ready, because this report is all about a big international move. Before we jump in, if you are all about getting clear, no-nonsense insights from financial documents, make sure you hit that subscribe button. And for those of you who love to chat about these companies and get more exclusive content, we've got a Discord community waiting for you. Link in the description below. Alright, so we're looking at a company called Dauch Corporation. They're a big player, incorporated in Delaware, and their stock trades on the New York Stock Exchange under the ticker AXL. Now, what is the big news here? It seems Dauch Corporation is making a significant play across the pond. They've announced an acquisition, a business combination as they call it, and this involves buying out a company called Dauch Group plc. Dauch is based in England and Wales, so this is a pretty substantial international move for Dauch. The core of this filing is an announcement made on the 4th of February 2026. This announcement was published through a service called the Regulatory News Service in London, which is a pretty standard way for companies there to get official news out. What is exciting is that Dauch Corporation's common stock is now being listed on the official list and the main market of the London Stock Exchange. This isn't just a small secondary listing, it is for their equity shares, specifically in the international commercial company's secondary listing category. It signifies a big step in their integration with Dauch. Think of it like this: Dauch Corporation is taking over Dauch Group plc lock, stock and barrel. This filing is essentially confirming that the deal is moving forward, and that Dauch's shares are now officially recognised and tradable on the London Stock Exchange. This really signals the completion of a major part of their business combination strategy. It is not just about owning another company, it is about opening up new markets and making their shares accessible to a wider group of investors. Now, when companies do big mergers or acquisitions like this, there are always things to watch out for. The report mentions potential adverse effects on the market price of the company's or Dauch's operating results. This is a standard legal disclaimer, but it is worth noting it means that the market might react in unexpected ways, either positively or negatively, to this news. Investors are always trying to figure out if the combined company will be worth more or less than the sum of its parts. This could mean fluctuations in the stock price as people try to get ahead of the potential outcomes. And it's not just about stock prices. The company is also talking about their future outlook in broad terms. They mention things like future capital expenditures, expenses, revenues, economic performance, synergies, financial conditions, market growth, dividend policy, losses, and future prospects. This is where they are legally required to warn investors that they might not hit their targets. They're saying, hey, we're planning for growth, we expect certain revenues, and we think we'll achieve certain synergies from this deal, but things could go differently. This is the classic forward-looking statement language that lawyers love, basically saying that their predictions about the future aren't guarantees. The report also points to their risk factors section in their most recent annual report on Form 10-K. This is where they likely detail all the specific things that could go wrong. For investors, this is crucial reading. It is where they'll spell out things like regulatory hurdles, integration challenges, potential loss of key personnel, or even broader economic downturns that could impact their plans. It's their way of saying, we're optimistic, but here are all the ways this could blow up. Looking at the signature here, we see Christopher J. May, the Executive Vice President and Chief Financial Officer, signing off on this report on the 4th of February 2026. This tells us that the financial leadership is aware of and stands behind the information being presented. It's a formal stamp of approval on this international expansion. So, what is my take on all this? Dauch Corporation is clearly embarking on a bold international strategy with this acquisition of Dauch Group. The move to list on the London Stock Exchange is a strong indicator of their commitment to integrating Dauch and tapping into the European market. This can bring significant opportunities for growth and diversification. However, as the filing itself warns, international mergers are complex. There are always risks associated with combining different corporate cultures, navigating new regulatory environments, and achieving the projected financial synergies. The real test will be how well Dauch Corporation manages the integration process and whether they can translate this ambitious expansion into tangible, profitable results for their shareholders. It is a high-stakes play, and we'll be watching closely. Alright, that is our breakdown of Dauch Corporation's latest filing. What is your take on these international moves and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and remember to subscribe for more deep dives. Don't forget to check out our Discord in the description for more exclusive content and discussions. Thanks for watching, and we'll see you next time.